Hey traders, Charting Man, Dana the Chart Guys checking in on FOMC Wednesday. So Powell raised rates 25 basis points. The market the past couple of days really shot up the probability of anticipating that was going to happen. And then forward-looking statements ended up dropping the price as the conference was going on at 2:30. So essentially what the market is fearful of as far as today's reaction, and again, we have to see what tomorrow and Friday's reaction are as far as do the bears follow through with the weakness that we saw today. But it is essentially the market saying, okay, Powell is still keeping further raising of rates on the table, which could continue to put downward pressure on banks. So the biggest loser for today is the financial sector and the regional banks more specifically. So we'll look at them in just a moment. But we had the initial reaction was bullish. We then dropped down and double bottomed at the low of the day. V-shaped to the high of the day, big drop when Powell started a little bit after Powell started the conference. And then right here on the 5-minute downtrend confirming is when the bears really hammered it home into the close. So all in all, not a huge red day. The NASDAQ was down 1.36%. SPY was down 1.7%, but definitely a temporary top. So what the bears need to see from here is a confirmed hourly downtrend next bounce. So any bounce that we see from here, if we gap down tomorrow, we're going to watch for a bounce, and then we need to confirm the hourly downtrend. If we open higher, got to see the hourly lower high and lower low. And then from there, bigger picture, the SPY bears are hoping that this is a head and shoulders type of pattern. And if that were to confirm, that would essentially tell us monthly consolidation is not done yet. And we're still pulling back on the monthly. And the story for me from here is back to, can the financial sector put in a bottom? Because if the financial sector cannot put in a bottom, fear is going to continue. And that doesn't necessarily mean it's going to continue in the market as a whole. We saw NASDAQ names really benefit from financial sector fear in the last week and a half. But I'm going to be looking short on the banks and the financial sector on bounces, just looking for these lower highs. And we'll look at those charts in just a moment. NASDAQ, we had this resistance zone on the daily time frame. We broke above it very briefly and now right back below it. So definitely keeping an eye on this resistance zone and still in a daily uptrend. So again, the bears still got to follow through. We need the hourly downtrend from here, and bears want to see the NASDAQ. We'll use QQQ. Bears want to see QQQ break 30201 because if that level holds, it's still a daily uptrend. And again, as I've mentioned, the NASDAQ is much stronger than the S&P 500. I am much less confident in the S&P 500 bulls than I am versus the NASDAQ. But again, it's pretty much a bull break with zero follow through. And now the question is, can bears go on offense? Financial sector. So we had a very nice resistance level today. The high of yesterday was 3204. We rejected from that level first thing. And then look at the end of the day here. So the end of the day, it was actually 3203 was the high of yesterday. But on the FOMC reaction, we had a double top at the high of yesterday and then a triple top. And yes, they're breaking by 1 penny, but 1 penny means nothing here. And so that is now a very important resistance level to draw that line on your chart and leave it there with how that reaction went. We know that is now the most important short-term resistance zone, and it's still a daily downtrend. The daily lower high was 3217, 3218. Now we have a new daily lower high at 3205. And again, we're looking right back down at the fear low of 3074. And if that level breaks, it's back to a bit of free fall. The next level that I'm looking at from there is down at 3060 and then all the way down to the low 29s. And again, we're not oversold on the weekly. So yeah, the banks have been beat up, but the daily RSI just cooled off. And we're not oversold on any longer term time frames. In fact, we're not oversold on any time frame from the hourly on up. KRE, the regional banks, a bit weaker. Daily lower high set. And again, heading back down towards our support zone. And for me, my mindset fundamentally is, okay, these names are still exposed with what Powell and the Fed is going to plan on keep doing. And we may see lower lows as a result. FRC has been one of the most beat up banks. A lot of people looking for this to be the next one that fails. I don't know anything about the fundamentals. I just know the chart's one of the weaker ones. And so we're looking down at the low of 1152, which again, it's back in play here. And clearly, no confidence that a bottom is set on a name like FRC. What was the other one? WYE? I'm forgetting the ticker. Something with a W. I lost my ticker list. Anyways, I really just play KRE, keeping it simple. So I'm watching for hourly lower highs tomorrow on everything. KRE, XLF, S&P 500, the crypto names. Let's look at those now. So crypto names had big green days yesterday, gave them back. Again, we saw signs of risk on yesterday, and now the market's saying, uh-oh, hold on. Powell was not as dovish as we were hoping. We can't go full risk on mode yet. And so we've got still a daily stair step on coin, but we're watching for hourly lower highs to be the result of the next bounce. Tons of space. We can bounce 5% and set an hourly lower high. And so again, I'm watching the crypto names because Bitcoin finally started its daily consolidation on the reaction. And so I'm watching crypto names for the potential hourly lower highs tomorrow. Semiconductors, a lot of strength on the morning. Weakness into the close. SMH bears need to break 248.70 to start to gain any momentum in their favor. NVDA has been on absolute fire. NVDA key support is 251.30. We can drop another 4% on NVDA before we get to that level. Again, there's space for hourly lower highs. And that's what I'm looking for tomorrow. Tesla had a bunch of tops similar to the financial sector. Not related, but high of daily resistance here. We were looking at 200 psychological, but more specifically, 248 cents as the top there. And so this morning, we rejected from 266 twice. So that's a double top. This is the 1 minute time frame. And again, we break resistance by less than 20 cents. We know it's nothing for Tesla. So we fail, we jump, we V-shaped bounce, we fail again. And then on the FOMC reaction, we fail yet again. So just like the financial sector, we have that line now as a very key level. Tesla, 248 to 266, now has like 4 or 5 tops at that level and then rolled over. And so the question now is Tesla shaping up a weekly lower high? And bears need to confirm the hourly downtrend. I mean, that's the case. That's the setup for tomorrow for so many names. Bears need to confirm the hourly downtrend. Healthcare pulling back on the daily. It is a potential inverse head and shoulders. Have to hold 123.12 and break 128.27 for that inverse head and shoulders to confirm. So keeping an eye on that. Certainly not going to be looking to play that bullish, but watching to see if the financial, or I should say the healthcare sector bulls are able to pull that off. IWM rejecting from daily EMA 12. Big drop. And heading back down towards its base of support at 170.38. And the biotech sector is falling apart. Huge red day today. Easily the weakest sector this week that I've been watching. Even weaker than cannabis, and that's saying something. And looking down at 72.55, and then again, a lack of support. Tons of space for an hourly lower high. Biotech bears taking control. Is this a potential 2-month bear flag? It's entirely possible. That break of weekly support at 74.97 was notable. The dollar, still weak. So 4-hour EMA 12 resistance guide, that's been resistance for a week at this point. And so even though the weakness in the dollar is helping the metals, but again, that inverse relationship between the broader market and the dollar is gone. It was there for a while. Correlations are temporary. But the metals had a good day. Silver daily bull flag confirmed. Gold daily higher low trying to be set here. Had a little hourly inverse head and shoulders at the low of the day. And then the bull FOMC reaction. So metals bulls are liking the dollar weakness, and they're still holding on just fine. And keeping an eye out for a Bitcoin daily higher low, because again, if the narratives are going to stay similar to as they've been, financial sector weakness was beneficial for the metals and beneficial for crypto. So keeping an eye out for, right now Bitcoin's trying its first hourly oversold bounce. We'll see if there's any follow through on that. Oil, watching daily EMA 12 resistance here. The 4-hour uptrend is still intact. So that's going to be our guide. Let's see if we got an hourly. Hey, let's see if we've got an hourly uptrending resistance line to be keeping an eye on. I'd be watching that and that. So keeping an eye on this. If this is a rising wedge and it breaks bear, we will zoom out and look for daily consolidation to be underway. In natural gas, the hourly from yesterday, I did it again. The hourly from yesterday, the exact same as the daily chart. Again, big bull move up, great, fast, hard move. No trend change, give the move all back. That's exactly what the daily chart just did. Daily chart bounced for 50%, didn't change the trend, gave it all back. So 4-hour, heading back down towards the low, trying to hold it. But again, it's bulls are playing defense, but they're not able to do anything on offense. So we got to remain skeptical of bulls until they prove something with some trend changes to try and hold this recent low. So overall, bears win today, no doubt about it. They've got to confirm the hourly downtrends. The best case scenario for a bear from here tomorrow would be all major sectors at the low of the day together. That would show us money leaving the market as a response to Powell and the Fed. If that doesn't happen, we'll watch to see what the rotation looks like, but we still got daily uptrends on a ton of these NASDAQ names, and the bears need to confirm the hourly downtrends and take out these daily uptrends if they are going to start to take over again. So good start for the bears. Follow through needed. Got to control the next couple of days. And tomorrow's going to be a biggie. Confirm those hourly downtrends to try and keep that bear momentum going. I didn't do a whole lot today. I never trade FOMC days significantly. You know, I've had some sizable FOMC loss days and some decent win days, but it's not my kind of trading style for those wild reactions. I like volatility on any given day, but not FOMC and fundamentally related. There's a lot more breaks with no follow through and complete reversals and fake outs on the FOMC days than there are on volatile regular days. So knowing that, I just take it easy and trade less. And the next couple of days, I'll be back in my regular trading flow as far as treating it like just any other day. So congrats if you had a good day. If not, perhaps sit out the FOMC days. There's nothing wrong with that. There's plenty of professional traders that don't trade around the FOMC reaction. So again, there's nothing wrong with that. Appreciate you watching. Do good things, and we will see you soon. It's time to grow some microgreens. So we've got sunflower seeds, salad mix, broccoli seeds, and peas. And you just throw some dirt in a little tray, put the seeds on top, keep them moist with a little spritzer, and I'm putting them on a heat map inside the sunroom here because it still gets chilly. But an analogy with trading, this is like scalp day trading. Minimal effort, just little quick, give me my gains, thank you very much. Not a whole lot of risk associated with them, but also not a huge amount of returns. If I plant a sunflower and let it grow to maturity, I'm going to get exponential gains where one sunflower seed could give me hundreds of sunflower seeds. But there is also risk associated with that. What if the plant dies 3 months in? Then I don't get anything. So I personally prefer the day trading scalp method for my trading, as there is less risk. I'm in complete control. I'm in the trade for 5-10 minutes. Gains locked in, on to the next one. That's your microgreen stock analogy.